Does anything like a perfect portfolio exist? Or how can a global portfolio for a passive investing strategy look like? These questions I will answer in this video, which can give you some ideas and inspiration for your own investment portfolio. So let's go with this next video. Hi everyone, my name is Sven and I want to show you with my videos that taking care of your personal finances doesn't need to be complicated. In today's video, we will go through some portfolios which you can use for a passive investing strategy. The different portfolios should just give you some ideas and inspiration. They do not represent an investment recommendation from my side, because at the end it's always your own decision what you want to invest in. So you should understand the different products, strategies and mechanisms before taking your own decision regarding your investments. In general, there's no such thing as the perfect portfolio, because you never know how different assets will develop in the upcoming future. An evaluation of a portfolio can always just be done for its historical performance, which is unfortunately no indication for its future performance. Never consider past performance of a company, fund or portfolio when deciding on your asset allocation. How to start investing with a 5-step guideline I already explained with my last video, linked here at the top. But now, let's have a look at the example portfolios. With all portfolios shown in this video, we will cover the global stock markets with different ETFs, enabling us to follow a passive investing strategy. One of the most common ways to build a global portfolio is the 70-30 portfolio. It combines two ETFs covering the developed and emerging markets. The underlying indices are the MSCI World and the MSCI Emerging Markets. The MSCI World includes the biggest 1,600 companies in developed markets worldwide, as already shown in one of my previous videos. By adding the MSCI Emerging Markets, we also include emerging countries like China, India, Brazil, South Africa and others, building a truly global portfolio. The ratio of 70-30 can of course also be adapted to your personal preferences. Compared to the classic 70-30, you can build an even simpler portfolio with just one global ETF. With an index like the MSCI All Country World Index or the FTSE All World, you can cover global stock markets. These global indices already include the developed and emerging markets in one index. The share of the emerging markets in these indices is usually a little bit lower than compared to the 70-30 approach, but they completely remove the need of any rebalancing activities. Already a bit more complicated is the 50-30-20 portfolio, which is a modified version of the 70-30 approach. In this portfolio, the 70% share of the MSCI World gets reduced to 50%, but the new ETF is added to the portfolio instead. This ETF covers just the European market, following an index like the STOXX Europe 600, which includes the 600 biggest companies of the European economy. This is done to reduce the influence of the US market, which builds a significant share of the MSCI World Index. More than 60% of the MSCI World are American companies, because the American market performed quite well in the past at the stock market, leading currently to a high share of US companies. Some investors want to reduce this high influence of the USA in their portfolio by adding more European companies in the form of a European ETF. Whether this is done with a 50-30-20 distribution or slightly different is again your own personal preference. It is more and more common to also consider environmental, social and ethical reasons in someone's investment decisions, increasing the demand for specialized investment products. Different criteria for such green investments were defined under the label of ESG, standing for environmental, social and governance, or the even stricter criteria of SRI, meaning socially responsible investing. You can build the classic 70-30 portfolio with, for example, the ESG version of the two indices, which filter out all companies not fulfilling the defined criteria. This of course decreases the number of companies you are investing in, and with that you also reduce the diversification of your portfolio. But your investments are then focused on companies following some environmental and ethical criteria, which might be a more important factor for you and your investments. In this video, we can just cover a few portfolio examples. Of course, there are a lot more combinations possible based on your personal preferences. Besides investing in stock ETFs, you can, for example, add bonds, real estate or commodities to your portfolio. There are endless possibilities on how to build a portfolio, but don't make it too complicated or over-engineer your investments. Quite often, people get excited when they start to invest and want to make their portfolio always better by adding another ETF covering a new asset class. Just starting with 1 or 2 ETFs covering the global stock markets is usually more than enough for the first years. I hope this video helped you to get an idea of what a global stock portfolio might look like and give you some inspiration of your own asset allocation. Feel free to subscribe to stay on board for future content and to leave a like to support this channel. I'm looking forward to getting your feedback in the comments below and preparing the next video for you. So see you soon and have a great day.